No one ever explains to you how knowing the difference between buying through an auction or private treaty can make sure you land your dream home. Each year, there are nearly 100,000 property auctions held across Australia, and for each auction held, there are just as many private treaty sales too. So when you're hunting for your next home, you won't know which sale type it will be. You just need to know how to manage both. And that's what I'm going to show you. Hello, next home buying warriors. Luke Xie from sfcapital here. In this video, I'm going to help you prepare for your next home buying battle, whether it be at auction or private treaty. Depending on the market conditions and the seller's unique circumstances, there are pros and cons for auctions and private treaties. As a next home buyer, you may sit on both sides of the table, as the seller of your existing home and the buyer for your next home. On the surface, it may seem that auctions and private treaties are the same. You're simply buying your next home, but that's not necessarily true. If you can understand the rules of either scenarios, particularly from the perspective of how it impacts your loan, which is what we'll be covering today, you'll be able to expand your next home buying options and able to safely land your next home. So what's the difference between buying at auction versus private treaty, and what impact does it have on your loan anyway? We'll answer this in two parts that should match the sequence of your actions and the process: due diligence and bidding. Part 1 is due diligence. The due diligence you do is the same for both sale types, but the timing of it is front-loaded with an auction versus a private treaty. The sale at an auction is unconditional, meaning there is no cooling off period. So you are committed to buying the property if you are the winning bidder. That means you should definitely do all of the necessary checks to be comfortable that it is the right property for you before you bid. During this stage, you should work closely with your solicitor to check things like the contract, easements, building reports, test reports, and strata reports if applicable. You will also need to negotiate the settlement period in advance and make sure to consider if you need to settle your current home prior or simultaneous to your next home as a condition of your loan. But for a private treaty, depending on the state or territory of Australia you're buying in, you may wish to defer some of these checks to be a condition of your offer, and that is satisfied during the cooling off period. Part 2 is bidding. Across the states and territories of Australia, the general rules of how an auction works are the same, and they are: number 1, auctions are unconditional, meaning they don't have a cooling off period, so you are committed to buying. Number 2, once bidding has reached a vendor's reserve price, the property is on the market and will be sold when the hammer falls. Number 3, if bidding doesn't reach the vendor's reserve price, the highest bidder has the first right to negotiate with the vendor. Number 4, contracts are signed and a deposit is paid immediately after auction. So you will want to check beforehand if a 5 or 10% deposit is required and what payment method is acceptable. There are finer details that are different, such as whether you need to be registered, rules around vendor bids, what license the auctioneer needs to have, but we won't be getting into these today. However, for private treaties, the rules can vary. For example, with the exception of Western Australia, although the length varies, a cooling off period is available in all other states and territories. During this cooling off period, it is critical that you do all of the due diligence we mentioned earlier, plus progress your loan to formal approval. Progressing the loan to formal approval requires obtaining a bank valuation and satisfying any other non-standard loan conditions. That is, a condition which is unique to you, such as closing a credit card. When you're going to auction or potentially facing a shorter cooling off period, say less than 5 business days, our recommended approach is to satisfy the non-standard loan conditions beforehand, leaving only the bank valuation. As a next home buyer, if you're selling your current home, a key non-standard loan condition may be aligning the settlement period of your current home and preparing any additional funds due to a variance in the purchase price of your next home and/or a variance in the sale price of your current home. By satisfying all conditions except the valuation prior to auction or the start of the cooling off period, you de-risk the possibility you won't be ready before the cooling off ends, or that you require an extension which the vendor does not agree to. So when the cooling off period ends, or that hammer drops with your winning bid, you can pay the balance of the 5 or 10% deposit with peace of mind that it is the right home for you and you can settle safely. If there's anything you need to take away today, here are 4 things you need to know. Number 1, in terms of risk management, private treaty sales with cooling off periods are safer than auctions because you can withdraw without risking as much deposit. But as the buyer, you won't be the one who gets to choose the sale type. So if you want more next home buying options, you need to be ready for both. Number 2, auctions are unconditional. So you need to have your pre-approval and all of your due diligence completed, including the settlement period agreed before bidding. This includes the settlement period of your current home if you need to sell it as a condition of your loan for your next home. Number 3, it is important to stick to your budget, plus a buffer. That way you can have a contingency plan, like having extra deposit or using a high LVR option in case the valuation comes in lower. This is equally relevant to auctions and private treaties. Number 3, private treaty requires moving efficiently during the cooling off period and aligning the timing of that cooling off period expiry with the anticipated date of achieving formal loan approval. This requires a detailed-oriented mortgage broker who knows how to project manage the process with key stakeholders such as your lender, solicitor, and the vendor's real estate agent. So make sure to keep your wits about you and be brave in participating in both auctions and private treaties. That way you maximize your chances of landing your dream next home. Make sure to like, subscribe to the SF Capital YouTube channel for further next home buying tips. Don't forget to click on the bell icon so you get notified as soon as the next one lands. I'm Luke Xie from SF Capital and I look forward to seeing you next time.